All right. Well, hello. Welcome everyone to our VantagePoint live stream here on our VantagePoint channel. So glad to have you all with us today. Of course, we're going to be talking about surviving the storm. It couldn't be more perfect timing. I did just have a storm come through my area. So if you're from Florida, you know what that's like in the afternoon here. But today we're going to be, of course, discussing surviving the storms that can occur in the markets. And, sometimes those can be not quite so fun, but surviving them can also lead to a lot of opportunity. So when market chaos happens, what types of opportunities can you find as a trader? So welcome to VantagePoint AI. If you're not familiar with VantagePoint, or this is the first time that you're seeing it today, do me a favor and just drop a comment in the chat to let me know that this is your first time, or maybe if you're not a VantagePoint user, because I do want to make sure that everybody's on the same page as we dive into our education for today. And just a reminder that any time that we dive into VantagePoint or, any trading discussion, I'm not a licensed advisor, but I'm here certainly to provide education as our, head trainer here at VantagePoint. We strive to provide resources not only to our family members, but also those of us watching on YouTube as well. So welcome to VantagePoint. And we're going to go ahead and get started for today. So I'm going to go ahead and jump on over into our VantagePoint software. And as we do that, we'll just take a quick overview so everybody understands how and what to look for when it comes to signals for swing trading in the software. Do me a quick favor too, in that chat, I'm going to be keeping an eye on the chat as we go through our session for today. So let me know if there are specific strategies that you yourself are focusing on. Again, I'm not going to tell you how to trade. You know how to do that as a trader, but I will hopefully provide some additional information that you can apply to your trade strategies to really help you improve not only your results, but also your confidence as well. So drop those in the chat for me if you can. Like I said, I am going to be keeping an eye on those as we go through our session for today. So let's thank you very much. All right, I'm seeing a lot coming in now. Thanks, Mardell. Glad to have you back. Shane, Kareem. All right. Well, welcome, Omar, to the live stream. We have lots of fun on these sessions, always looking to do some live analysis. So thank you, everybody, for joining. And let's get to it. Let's get to the good stuff, right? So first and foremost, I always start out each session with just reminding even our VantagePoint users who are familiar with this, maybe you've been using the software for decades, you can always learn something new from the basics. So just a quick review of the basics here for everybody. Remember red and green. I know that's a tough thing to remember, but green for bullish, red for bearish. And it's really that simple. If you keep it simple, you can actually perform really complex analysis without overwhelming yourself. And that's the goal here with VantagePoint, is to take these really complex concepts, but make it very simple and easy to use for retail traders, for individual traders themselves. So let's get to it. Remember, red and green, right? So if we're looking for green, that would be markets expecting to go up. Of course, we can see that in our trend here. As long as that trend remains green, then we would be expecting bullishness. And then of course, if it's red, you can see over here towards the end, we can even back this up a little bit further. You can see where it's red and sort of choppy here. That would be an indication of maybe just hold off for a little bit until we get clear signals. So how do we notice the difference or know the difference between something that's just kind of whipsawing, right? Raise your hand or push the like button if you've ever been whipsawed out of a trade, because I know that has happened to many of you. So I'd love to see some responses and just to see, who's looking to avoid those scenarios moving forward. Maybe we can even cover those today, because that's oftentimes what happens when we're sort of in the midst of a storm, is areas of the market that end up, getting very choppy and very volatile. And so when that happens, how do you navigate through those different scenarios? How do we navigate through some of the fundamentals as well? Yeah, I mean, it can happen in just about any market. So being cautious, being careful, but also having better, more confident signals can certainly help you to avoid those scenarios as well. So really what we do is look for confirmation among the signals. Confirmation, guys, is going to be confidence for you as a trader to make the decision that you need to make. And so we can see here that when our trend turns bullish, right, that is actually a signal, our first signal coming from the artificial intelligence, coming from the predictive data and the predictive indicators. And so when we are looking for those bullish signals, we would want to look for additional pieces of confirmation. I see some additional chats coming in, so I just have to chuckle at some of the responses because you guys are, you guys are awesome. But when we look at the trade signals, you can see that oh gosh, that's really big. Hang on, I did not mean to make that big. There we go. All right, a little bit more manageable there. I didn't want to block out the whole screen. But when we get that initial bullish signal, that's going to be that blue line. That's a predictive moving average that moves above a simple moving average. All right, now, at first glance, that seems pretty simple until you realize what goes into the calculation of that predictive blue line. That's an incredibly powerful predictive blue line. I'm just going to pop the hood here for you guys so we can see. You can actually do this on any market here in VantagePoint. And I've got NVIDIA here because, well, we know NVIDIA has been on a pretty big run. Most traders are familiar with NVIDIA, especially right now. But this data, this graph behind the scenes is actually what is being calculated and evaluated when it comes to the movement of NVIDIA. See, VantagePoint doesn't just look at one singular asset. It looks at what's impacting that asset. What markets are really pushing, pulling, and driving that stock's price action? Are they making it go up? Are they making it go down? Are they sort of holding it in place in this area of consolidation? Or are they causing it to fluctuate back and forth? And by understanding what's really driving an asset, we know what direction it's expected to go with so much more confidence. So actually up to 87.4% confidence. So with that level of confidence in the markets, you can certainly make a more informed trade decision for yourself. So let's take a look at not just that crossover, but then we also have additional predictive data here, which is going to be found in that neural index. So that neural index really measures price action or the expected move of price over the next 2 days. So a couple of you were asking for time frames here in VantagePoint. You can actually set the VantagePoint software up to look at multiple time frames. Typically, we're looking at 1 to 3 days. So that's anywhere from 1 to 2 to 3 days out, depending upon what type of trader you are. But that's why it is fabulous for swing trading. All right. So being able to see, as a swing trader, being able to see 1, 2, and 3 days out, that can provide vital information to not only big potential profits, but also saving yourself from a lot of heartache as well. And so using those predictive indicators, we can see, again, that bullish crossover that's happening here. And that's on 425, right? But then let's look down and confirm, do we have that neural index, that price action, also expecting bullishness? So now we have not only one indicator, but we have two confirming that same directional shift within this particular market, NVIDIA in this case. And then we're going to bring that down to a measure of strength, which is going to be our predictive differences down here. And guys, I know I might be using some terminology you're not familiar with, but what you need to understand is these are multiple forms of analysis that we're looking for agreement upon. So when we find agreement within these indicators, you can have a lot of confidence in the readings that are coming from them. And when you have agreement, we certainly have a lot more probability stacked in your favor, so you can make sure you're positioning yourself on the correct side of that trend. And so with these predictive differences, these are measures of strength. You can think of them sort of as preliminary momentum indicators as well. Basically, we have a bullish signal, right? A bullish trend indication. We have price confirming that trend signal. And then we want to know, do we have strength backing that trend up to really make sure it goes somewhere, right? And that is where this confirmation, this layered confirmation comes into play. And so when we have those stacked odds in your favor, you can trade with confidence looking at that trend expectation to go up at least over the next 1 to 3 days. All right. So take a look at this sort of whipsaw area back here. You notice we do have a crossover to the upside right here, but look what's happening to one of those predictive differences. See how that's trending down? So when things are not in agreement, well, oftentimes there's a bit of imbalance or a tug of war that's happening. That chaos can occur when things are not in agreement, right? So seeing where things are lined up in this sort of confirming scenario, that's where the trend really takes off. And that's exactly what we see starting to happen here. Now, that's your entry, right? Because entry is only 1/3 of your trade strategy, right? If we break it down into sort of 3 parts, you have your entry, then you would have your position management. What are you doing with that position all throughout the course of that trend? And then what is your exit strategy? So entry is just 1/3 of that. Well, look at what VantagePoint can do. We see the blue line crossed over the black line. Now, once you're in that trend, once you have really had the confidence to jump into that potential trend, and here we see that bullishness, then we're just looking for that blue line to remain above the black line. No red in sight here, so we're just really managing that trend all the way through, giving you confidence to actually stay in that trend longer term as well. So what may have started out as a potentially 1 to 3 day trade, through position management, good position management, good money management, you can actually manage that trade on through using VantagePoint with a lot of confidence, because we know using this particular crossover, and I'll go through the crossovers here in just a moment, we're actually looking at a 2-day trend prediction. So if we look at our potential here for yesterday, right? Keep in mind, VantagePoint's a predictive software. If you didn't know, surprise, now you know. You're actually looking at really powerful predictive data that's forecasting ahead of the markets. We're looking at the predictive day of 7/29. Now, for those of you who are just seeing VantagePoint for the first time, you may not know, but VantagePoint users had this information last night at 6:30 p.m. Eastern Standard Time. So allowing you to do this analysis ahead of time and prep and prepare and strategize for that next trade day. No more reacting to the markets, right? Be proactive in your approach so you can have a strategy that's going to work for you with the current market conditions and really get you on the right side of the trade that much faster. So let me just take a look here. I've got some comments coming in. So yes, whether you've traded before or not, VantagePoint, certainly very simple. In fact, we have a lot of newer traders who, use the software because it is so simple. So, we of course provide training and resources on the software as well. So thank you for that question. Okay, very good. So yes. So for breakouts, you can actually use it to find breakouts on the SPY. I figured it was a little, a little typo. Is it Safi? Okay, perfect. Yeah. So no worries. Well, we can actually take a look at the SPY as well. We do forecast for the SPY as well. So we would simply look at the shorter term indication if you are looking for a short-term crossover. So this is again, 2-day trend forecast. If you're looking for a shorter term moves, shorter swings, that's okay. VantagePoint's got you covered there too, because we know everyone trades on a slightly different time frame. Every trader is, and every trade style is as unique as the trader themselves. And so you could actually switch over to a short-term crossover. The short-term crossover is going to give you a 1-day trend forecast. So in that case, again, you're just really looking for that blue line to stay bullish until it crosses over, which actually we have a crossover here. So in this case, you might be in and out a little bit faster. That's going to depend on the individual trader. Now, for longer term, you could also switch over to a 3-day. So again, this is how simple it is to switch between the time frames. You could also use these various crossovers together for that entry or position management. After you're entering into a trade and you find things are, maybe going really well, maybe better than expected, right? Maybe you enter here and you are expecting that bullish move to only last a couple of days, but lo and behold, the markets, really provide a great opportunity for you. And VantagePoint's just helping you navigate through that all the way, right? But if you're in that position, it's going well, then maybe you switch to a different crossover for your position management. Maybe you switch to that medium term. Maybe you're a long-term trader and you want to stay in with a little bit more confidence, a little longer term. You're slightly more conservative. That's okay too. Everyone's going to use the software just a little differently depending upon their trade strategy. But that's really what makes VantagePoint such an amazing predictive system, is that you can customize that. But overall, you're going to read each of the indicators the same way, just going to adjust it to your own individual trade strategy and time frame. So this is a long-term crossover. It's looking out 3 days. So we can see on current anticipation on NVIDIA, we have a trend forecast of a continued potential bullishness. So with that, we would expect that trend to continue at least over the next 3 days. Now that's managing through some of the chaos, guys. Remember, we've had a lot of chaos in the market conditions recently, especially with tariff announcements and news, the Fed, I mean, you name it. We've had earnings recently, right? And so being able to navigate through some of those storms, whether or not it's just going to be a, slight shower or whether to expect like hurricane force conditions. And for those of you who are living in Florida, you know what I mean. I'm based out of the Tampa area, so we're used to that. We know that we need to prep for kind of different types of conditions throughout the year. And being proactive in that approach is really what matters. And it's the same with your trends. Whether you're weathering a storm in the markets, or whether things are smooth sailing, you need to be able to manage those positions. So, the predictive indicators can certainly help you with that. But again, we do have additional time frames looking at the triple cross as well. And this triple cross actually places 3 predictive moving averages on the screen at the same time to help you manage those longer term positions as well. Or who of you maybe scale into positions? Who's maybe adding to positions along the way? Go ahead and put that in the chat if you are, so I know kind of what types of things to cover today, because everyone's going to weather the storm a little bit differently depending upon your trade strategy and your risk tolerances as well. So let's take a look at a couple of other markets here. Someone had asked about the SPY, so I'm just going to pull that up here for us as well. Let's go ahead and take a look at the SPY. The SPY is, of course, the ETF that's going to follow the S&P. All right, so this is going to be a derivative of the S&P, or those stocks that are traded on the S&P 500. So we can even back this out slightly so we can see the potential downside risk as well. All right, so if you notice back here in February, anybody get caught up in that downslide that happened back in February? Let me know. Not to call anybody out, but it's important to understand what happened previously in your trade strategy, what went wrong, so we can, really make it more about the lesson than the loss. And so if you found yourself getting caught up in this downside and you're like, why did I stay in that? Because it took you almost all of this time, right? Only recently have you recovered those losses. It wasn't until kind of beginning of July that you really started to recover those losses from that downturn that happened in early February. Why waste half the year on that if you don't have to, right? So better understanding when to exit is incredibly important here. And so when we see, and I'm going to use those 4 points of confirmation again, those pieces of confirmation, we have a crossover to the downside. Our neural index or price action, again, these different forms of analysis, we're looking at the trend with the crossover, we're looking at price with the neural index, and then moving down from there, take a look at the strength. Do we have bearish strength here? Yes, we do. And so with this sort of chaos that's about to happen, why not take advantage of some of the downside potential in the market as well. If you like to short the market, this is a great opportunity. Or find other areas of the market that typically move up when the markets are moving down. Things like safe haven assets, things like gold, consumer staples as well. So there's other areas of the market that do well typically when the equities are coming down or there's market equity weakness, if you will. And so understanding that can be just change the total outlook of your approach to the markets. And that's really what we want to help you with. That's what we're here for, is to help you better understand what markets to act on and when, and then how to manage on out from there. So, of course, protecting yourself or taking advantage of some of that market chaos can certainly lead to much better results in your trading, and regardless of the strategy, right? If you're protecting yourself here or you see that as a great opportunity, everyone's going to look at it a little differently. But this is the SPY. So let's take a look at the SPY a little closer for today's current information, what we were expecting on the SPY today. Because if we take a look at, so I'm just watching some of the comments here come in, and I just want to make sure that everybody is covered here. Yes, we do have a scanner. I will absolutely, I would love to show you the scanner in the session today. So we'll get to that here very shortly. That's actually a very good point. And I will show you how to find some of those, stronger moving areas of the market, because we want to help you navigate through that volatility. So we'll certainly take a look at that. But let's first assess the market conditions, because the SPY can give you a really good heads up onto what's expected to happen for the day too, and what we would expect to happen the next couple of days, right? Again, that proactive approach. So especially as we start to see some of these fundamentals coming into play, I'll say it again, we've got a Fed announcement, we've got so many things happening. We are in the midst of earnings as well. So we're like peak earnings season right now. And then we also have the deadline for the tariffs looming. So how do you navigate through those fundamentals? And the best way to do that is use artificial intelligence. We use it in every aspect of our life. Why would we not use it to make trading easier and more accurate as well, right? And so using the predictive data, you can see we're expecting to remain bullish on the SPY. All right, but we know we're at all-time highs as well, if you've been paying attention to the markets at all. If not, let that be kind of your first educational piece for today, or maybe the second or third, but we are at all-time highs. So we know that we're sort of overextended to the upside. Could we be reaching a top, right? I think that's the biggest question I've had recently from so many different traders is, how far can we go, right? How high can you run, or how high can you fly before you have to come back down? And so watching the predictive analysis, we'll be able to see when that downturn is expected. And I'm very confident in saying that because I'm very confident in the software. And so if you say that you have the trend forecast up, and I'll actually switch over to these various crossovers. You can see we still have green in all of our crossovers here, the short term, the medium term, we've got the long term here, and then also the triple cross. So it's really that easy to toggle back and forth between these crossovers. And I'm actually going to take the triple cross here for just a second, because who has ever wondered whether or not this is just maybe a pullback, or if you should really kind of look out below? Like, are we about to fall off of a cliff, or is this just a little bit of a stumble? Let me know in the chat, because this really helps me to kind of see where to take this session for today, because what you guys are experiencing in the markets are really what we want to cover on these live sessions. That's why we do them. So you can see areas in the trend that turn this yellow shaded color. And this is telling you, especially on the triple cross, areas where there might be a little bit more caution that needs to be exercised, right? So the question is, are we there currently? No, right? So we're still sort of confidently bullish, although we're assessing for risk as well, as we're at these all-time highs. So if you want to know when you need to sort of have more kind of risk management in place, really making sure that you're protecting yourself, these areas of yellow can help you to better understand that as well. Now, as long as we remain bullish, you'll notice the trend was yellow here sort of mid-June, right? We had a bit of a pullback happening, but we never break below this darker blue line. This darker blue line can act as sort of a level of dynamic support and resistance as well. So with support and resistance, we know it pushes price up when it's supporting price. And if it's resistance in a downtrend, well, then it would push price down. But in this case, you can see at several points, price action tries to break below this darker blue T-cross long level, but never gets the chance to actually stay below that level. And at that point, we start to see renewed bullish strength coming in. Remember our strength indicators down here, those predictive differences, that can tell you that, hey, this is still a continuous bullish trend. We did have a little bit of weakness, but nothing ever shifted red here within the trend. And now we're seeing bullish strength start to pull back in. Well, good. This is more of a rest and reset for the trend. And I asked if anybody scales into positions at that time. Well, scaling in on a pullback could be a great opportunity to kind of buy in on that dip as well. Of course, that's going to depend upon your own individual strategy. Keep in mind, I'm not here to tell you what to do, but if you have a trade plan that says, you like to add to positions on a dip, then don't you want to know when that dip is occurring and whether or not it's time to get back in? Stands to reason that would be pretty good information to have. But imagine having that information a day ahead of time so you can plan and prepare for that with confidence as well. So if for those of you who don't know about VantagePoint yet, or maybe this is again the first time you're seeing it, you can of course go to VantagePointForecast.com. I know we'll drop it in the chat as well. But you can go to that VantagePointForecast.com to get additional information on VantagePoint and how we're using artificial intelligence and neural networks to forecast for the markets ahead of time. So someone had asked about a screener. So our screener is actually called Intelliscan. So for those of you VantagePoint users out there, you probably know Intelliscan very, very well. And so we're going to actually create a new Intelliscan together today. So I'm going to go ahead and open up a new Intelliscan because part of our session is kind of navigating through the storm. Do you have, are you prepped and ready for other areas of the market if we are expected to see a downturn? So what happens if the market does forecast, or if VantagePoint forecasts that shift to the downside? And I'm not saying we're doing that now, but wouldn't you rather be prepared and ready rather than kind of, reacting to the markets and scrambling at the last minute, wondering and getting emotional about what you're going to do? No, if you have a plan in place, you can execute the plan. You can do that much more, much faster. You can do it much more efficiently, and it's certainly going to be a much more accurate and well executed plan if you know what's expected ahead of time so you can prepare for it. All right. So understanding what other areas of the market could be moving during these times can also be incredibly helpful. So one thing that you can do within the Intelliscan, if you will, is in fact add in things like the spider sector. We were just looking at the SPY. So I'm going to just back this out so you guys can see, for those of you who haven't seen VantagePoint, yes, we forecast for several different assets, anywhere from, Forex to cryptocurrencies to stocks to ETFs. And we've recently expanded our ETFs as well, because ETFs are a really great way to diversify in the market. They're a little bit more stable than the individual stocks as well, because you're not putting all of your eggs in one basket. Who trades ETFs in our session today? Because we can certainly expand on that if you'd like as well. But what I'm going to do is pull in the spider sector. So this is a great breakdown of the S&P. And the S&P gives a really good just kind of overall health of the general markets, general economy as well. We hear, it talked about relentlessly on the news and things of that nature. So we can actually use the breakdown of the SPY to assess sort of where money is flowing from one area of the market to another throughout the course of the year. And we can use our predictive data to do so. So I'm going to this is a great example of how to use Intelliscan, not just to find individual assets, but also to find what areas of the market to focus on, right? It's like sometimes, you wonder how traders know what areas of the markets move and when. When is tech moving? When is energy moving? Why is gold going crazy, right? And so being able to scan on those assets and knowing ahead of time can help you be on the front edge of that as well. So that way you're not always trying to play catch up. You can really understand this information on your own and let the software do all of the work for you. All right. So it's like ChatGPT for finding areas of the markets that are moving, for finding trends, right? So if we take the sectors themselves, you can see that I've put the breakdown of sectors from the SPY in my Intelliscan here. So you can see the list of sectors that's under the market panel right here, this market column, and I can even pull down the chart just a little bit more so you guys can see. But we've got consumer discretionary. Those are going to be those cyclical consumer products, right? Things that people cycle through. They're not always bought throughout the whole year. Consumer staples. Those are going to be those non-cyclical items, those necessary items that, people need on a day-to-day basis. And those consumer staples can oftentimes see a really strong move to the upside when other areas of the market are falling, when the other equities might not look so great, when the markets might be taking a turn to the downside. Oftentimes traders will move into that consumer staples because, those items are not going away. Everybody has to buy them anyways, right? So again, these are where areas of the market, when you start to see movement into them, can be a great alternative to help you find opportunities even amongst market chaos. Okay. So again, here's the Dow, here's the energy sector. Now you'll notice you've got green and red in the Intelliscan. I told you I love a good color coding system. So when you see, things going up. Now keep in mind, guys, look at this. This is our short-term crossover. Remember, this is our 1-day trend forecast. Medium term is our 2-day trend forecast. Long term is our 3-day trend forecast, and so on. Here's your more conservative triple cross as well. So we can actually look at the direction of these expected trends from the Intelliscan to really get a quick assessment, sort of just at a glance view of what is happening in those different sectors. All right. Perfect. I don't really have a preferred trade platform. I think any trade platform that you as the trader can navigate through comfortably is the one that you should use. Someone just asked that in the chat. Everything from finding new opportunities to managing that position to, deciding where to potentially enter can be done on VantagePoint. What you're doing once you've made the decision on what you're going to trade and how you're going to trade it, that execution is just done in your platform. So then you can go to your platform, just quickly place the trade and have a lot of confidence on where that trade is expected to trend as well. So that's a great question. Thank you for that. But you won't actually execute your trades in VantagePoint, but you'll do everything up until that point. But who doesn't want a system that helps you make wiser trade decisions? And that's what VantagePoint provides. So let's take a look at some of these sectors. Now, if you're looking for a sector where money flow is actually pushing into that asset, then we would look for things that are going up, right? So let's just quickly set this scan to up, and I can even just type in up. I can put in a U, or guess what? You could even use the drop down and select up from there. It's really that simple. So if we're looking for sectors that are moving up across the board, we could actually just set this all to up, and we can see the sectors that really do have good movement in them right now. And this is going to be consumer discretionary, consumer growth, semiconductors, technology. These are sectors that have been moving and really have some strength in them as well. So if you remove your filters, you could even just click that little X and it'll remove those filters for you. So really easy to use software, user friendly as well. So with our sectors, we can now see what's moving up and what is not. So if you're looking for additional opportunities in those various sectors, then maybe technology is a good place to look, right? Maybe, semiconductors. And as the market, if the market starts to shift, depending upon, Fed announcements and things and just navigating through the chaos, you'll see a shift in the sectors. And when you see that shift in the sectors, that's when you know you should probably take some action as well. So once you start to see that shift, you know that you probably need to do something about it. Maybe go in and manage your current positions. If you're at a profit taking point, maybe you're taking profits. Maybe you're peeling off a portion of your position to protect your profits as well. Lots of different risk management strategies that you as a trader can, identify as the best course of action for you. But knowing that you need to act is the very first step. And when you see that shift in the software, that's probably a good sign for that. So let's take a look at how to scan for individual assets. Now that we know what areas of the market we should be looking for, let's go into, let's just clear out our markets here. So I'm just gonna remove our ETFs here, our spider sector, our sector overview, if you will. And we're going to add in markets themselves. So we're going to actually add in all of our US stocks. So you see the breakdown of the ETFs here, everything that we have, right? But you can also look at the full breakdown of the individual stocks that we forecast for. So we have, 5G, basic materials, biotech, cannabis, the list goes on. Here's your consumer cyclical and non-cyclical. Cyclical going to be more discretionary, non-cyclical, those are going to be your consumer staples. So we do have a nice breakdown of the market and a way to scan on that as well. We can actually just come over to our indicators and add category to that scan. That category right here is going to tell us where that stock is located in that particular sector. What sector is that stock located in? And so we can actually look for, let's see, if we're looking for bullish trends, what direction would we want our predictive indicators forecasting the trend? Everybody say up, right? That was rhetorical, at least I hope. So I can actually just set our predictive crossovers in the up direction, right? So if we're looking for earlier trends, earlier signals, we would want to use our, more sensitive crossovers like the 1 and the 2 day. So let's focus on that 1 and 2 day crossover here. Then we can actually set that neural index, the short-term difference. We want strength coming into that trend, right? So these are those 4 points of confirmation we looked at previously. All right, so here's your crossovers right here from here to here. Those are the crossovers right here. Your neural index, we want that green or going up, right? And then of course, we also want those predictive differences coming up as well. So you can see a little bit of weakness in the SPY right now on the predictive differences. Anybody wondering why? We've sort of seen a stall in price action on the SPY. If you see that, and you know that there's some potential shorter term weakness coming into the SPY, you wouldn't overreact to when you see that occurring in the markets the next day. You're keeping those emotions out of it. You're keeping those emotions at bay. All right. Really, really focusing instead of on the emotion, on the data so you can make an informed decision. All right. Usually emotional trading does not end well, right? So who has had an emotional trade that didn't end well? Right? Everybody raise your hand, right? Everybody should be giving me a thumbs up on that one for sure. Perfect. Yeah. All right. Just trying to keep an eye on those chats. Noticed that sometimes there are slim pickings when it comes to the Intelliscan. Well, if no opportunities are showing up for those results, then you might want to find a different opportunity to trade, right? Or a different strategy. Maybe that strategy just isn't working in the current market conditions. And understanding what works and what doesn't in current market conditions is how you better strategize. So then you can create different types of scans. So this is just an initial scan looking for the short and the medium term crossover. And David, thank you for that question, because that'll actually, let's start with this scan and then we'll further customize it for those different types of conditions. So let's just grab our US stocks. It's as easy as this. I like the fun way. You can just drag and drop those stocks right in there to the screener, or Intelliscan, if you will. Nobody will forget Intelliscan after today's session. All right. So here we have markets that are trending up and expected to continue trending up because we have up across the board. All right. Now, if we look at some of these here, we can see that on our crossovers, these have been going up and are expected to continue going up. Here's Broadcom. Do we have bullish expectation here on Broadcom? And we can see, yeah, we do, right? We can see that the crossovers here are still bullish. Our short, medium, long, and triple cross, if we go through all of these, are still bullish, right? We're on our medium term right now, but looking at the short term, we know this because it's showing us up in the scan. But you would still want to come down and evaluate the charts as well, all right? With predictive range, with the predictive range here, and I'm going to zoom in a little closer because I didn't quite hit on this in some of the other charts that we've looked at so far. So here's your predictive trading range for the next day. Keep in mind, VantagePoint traders had this last night, right? So if you want to know the expected range for the day, VantagePoint provides that using all of that predictive analysis, using that market analysis in the background, that artificial intelligence that runs through the neural networks. So here we have a predicted high and a predicted low. Well, if we're expecting a bullish predicted high, that means the high is higher than the day before and the low is also higher than the day before. That's why they're shaded in green. So again, that's that predictive range that we're using in the Intelliscan. We were looking for those that are expected to have a higher high and a higher low with that up direction set in the Intelliscan. And lo and behold, all of our crossovers, we have strength coming in, we have the neural index bullish, and the predictive range was bullish. And guys, guess what? Pretty sure Broadcom was up today, right? So this is where you can better time those trades. Now, if you're a shorter term trader, you might have been out through here. You might have taken a shorter term profit here on 721, right? Or possibly even gotten stopped out on 722 if you're managing that from, if you're using stops, all right? But then your signal to get back in happens on 724, where we do have bullish projections coming up. All right, so potentially even entering, let's just patronize it a little bit, entering after that crossover on 725. So entering here, and then I believe we were up at like 297, if I'm not mistaken. So somewhere right around that predictive high. I'm just going to click right here. We can edit that if need be, but almost 3% profit in 3 days, right? And of course, that's give or take a little bit. In fact, Broadcom's up at 297. There we go. 297.42. So almost to the penny, guys. On my crosshairs here, and the predictive high was 296.76. So this market actually did better than expected by a little bit today. So love it when things go even more in your favor. Right? So again, we can see just that quick short-term move. But if you did want to take advantage of a longer-term swing, that's when you can back this out slightly. Switch over to your longer-term view. And here you can see you've got a fresh crossover here as well if you're trying to stay out of that consolidation. That's navigating through a storm, guys, right? Do you want to stay in for that consolidation, or do you want to get out, move those profits into something else, and you've got a 16% gain potentially in 25 days. All right, that's on 500 shares. You could also change that depending upon what your position sizing is. Typically, if you're trading options, that would just be less premium as well. All right, so really quite simply using the crossover, the predictive differences, all right, a little tongue tied, and then the neural index trend as well. Check. Have confidence. Use the predicted data, right? And this is all coming from the Intelliscan. So again, shorter term here on the day because we're just looking at that short term crossover that happened recently. That's okay, David. That's totally up to you, right? And so for you, you might have wanted to catch something that's at a reversal, right? Where something price is a little bit lower. Maybe you're looking for a bottom, right? Does that kind of look like something that's more ideal for your trade strategy? If so, great. Let's set up a scan for that. So take a look at the scan here. We're actually coming out of a downtrend and starting to reverse into a bullish trend. That's that shift that I was talking about, right? So if you're in a downtrend, an overextended downtrend, and you're looking for newer, fresher opportunities, right? Because some traders might say, look at this and say, no, I want to stay in a little bit longer. This is already too high. And that's okay. That's your trade strategy, right? We want you to understand how to use VantagePoint to your advantage. And everyone is going to trade it a little differently. But that's, again, why we provide so many resources and training for our VantagePoint users. So if you are kind of more of a longer term swing trader, you're looking for bottoms, there's nothing wrong with that. There's plenty of opportunity like that in the market too. So let's find that in the Intelliscan. All right. If that's the case, remember, we're already to the downside. In fact, let me just show you guys here. I'm going to switch over to the triple cross, right? And these indicators, I'll come with VantagePoint here. So you can see you've got that triple cross right here. This is down. That triple cross is down the whole time. Well, here's your triple cross right here in the scan. So if you're looking for a trend that's been overextended to the downside and possibly finding that bottom, well, then set that triple cross instead of up, just set it to down. And now we have markets that are trending down or have been trending down for quite some time. You can even see the number of days here, right? But are expected to start shifting based on the short and the medium term crossover. All right. So let's take a look here and assess from this standpoint. Let's just take a look at Zscaler here and see what we've got coming up. Perfect. Okay. So if we take a look here at Zscaler, you can see ZS, we've got a crossover to the downside that happened back on 7/10 with full confirmation, right? So here to the downside, neural index is bearish, predictive differences are bearish. If you are in a long position at that point, that may be a signal, right, that you might want to do something about this. Take profits, set stops, do something to protect yourself, hedge against the position if you're a longer term or you have an investment here. Anything to protect yourself from the downside risk, because, you know, who wants to give money back to the markets? You know, keep it, right? So we can avoid those losses by just looking at your crossover. You, in fact, had weakness already coming up here with the crossover and your predictive differences already happening. So you can see even on the shorter term crossover, I'll just switch over here. We had that shorter term crossover happening as well. And so, well, actually you had it back here with things coming down. So this is, again, that whipsaw scenario that you can avoid where we've pretty much so topped out on the trend and now expecting that bearishness. So right here, you can see neural index predictive differences. That's confirmation that things are likely to start trending down, so you can avoid, a week of sideways movement as well. So avoiding marginal trades or just letting things sit there while the market's not moving, you can find other opportunities that are moving better, so you can really use your money and leverage it rather than just sitting in something that's moving sideways and not doing anything for you. This is trade efficiency too, right? Well, that's what we're doing right here. You tell me, Griff, if you see a fresh crossover like what we see here, right? Last night, actually, you technically saw that on 7/25, so we saw that on Friday. If you see a fresh crossover update on Friday evening, all right, and you have your points of confirmation where we have a bullish crossover, the neural index is trending up and your predictive differences are coming up, and you have that predictive trade candle as well trending up. Do you have a lot more confidence going into Monday knowing that that position is expected to move higher? Would you have more confidence to get in on Monday? And if you did, right, and again, I'm not saying you should, this is just a hypothetical example, but if you did enter into a position here, managing it then after Monday's close to see, okay, are we expecting bullishness tomorrow? Would you have the confidence to stay in that position? If so, then you would be managing that position at that point. And with that crossover here, again, let's take a look. You can even look up the asset right here. Just click that little magnifying glass, and Zscaler ended at 290.07. So we're up towards the upper range of that predictive trade candle. 290.07 is where Zscaler finished out for the day. So we can see we're already starting to see profits here by managing that position and entering that new trend, right? So it's taking advantage of this market movement, but having the information and preparing your trade ahead of time, all right? Having the confidence to stay in, as well as knowing when to exit as well. Because this new trend could turn into something even greater. Let's take a look at what Zscaler did previously, just as an example of this. And again, this is what came up in the scan, right? This scan was built off of the predictive data as well. So we actually see a crossover here with our predictive differences already crossing over here on 411, possibly even a little earlier entry here if you use the short-term crossover for your entries. That's going to be up to you. A little riskier on the shorter term, but you see we do get that earlier signal, and then waiting for that medium-term crossover to comply can also be a good progression strategy. Maybe if you like to scale into your positions, you take a smaller position initially when there's a little bit more risk, and then add to it when you have a bit more confidence. That's a way to kind of manage your capital along the way and manage your risk as well. And then once you get that medium-term crossover with things continuing, again, we're bullish all the way up until we got that real, that confirmation with the predictive differences all coming down. And maybe you as a trader are just looking for that shorter swing. Maybe this is where you exit out when we had our predictive differences coming down in the neural index as well. Let's take a look at the short-term crossover here. When do we have that? Yep, so here we had a short-term crossover with those all coming down. So you may have just taken advantage of that run, right? From here, maybe you got out there to here. Again, I'm just looking from crossover to crossover here. That's a gain of 47.14%. But if you know the night before that you have confidence to stay in, that certainly makes that decision making a lot easier and a lot more accurate as well. That's not to say that you won't have losses. There's no such thing as a perfect system or a perfect setup. There's no 100% guarantee, but with accuracy like 87.4%, you certainly give yourself an advantage, right? So, all right, let's take a look. I tell you what, we did some scans. We set up some different types of scans that looked at the sector movement, where are things, really shifting in the markets. And guess what, guys? We're in technology. There's cybersecurity, technology and cybersecurity, where things are shifting to the upside. Isn't that where the sectors were moving, where that money flow was coming from too, right? So those are different, tactics to scan for areas of the market that are actually having money flow come into them using the sector analysis. Now, also too, if you want to look at different areas of the market, like those kind of safe haven assets, you could look at things like gold as well. I'm going to pull up GLD today because we did see that we had this sort of pausing in price action. And I'm going to show you here. I'm actually going to add on some additional, there are some additional optional indicators that you can add on to VantagePoint, but we can see gold right here at a support level. Who uses support and resistance? Anyone? All right. So if we see a level of support, and remember we were talking about that support level from the triple cross, right? So when we see a support level right here, this is going to be a sort of floor for price. And price, certainly can break below, but you can see we've actually tried to break below the support level before and been unable to do so. And so with a support level like this and some potential looming fundamentals in the works here, we may look to see for gold to have this shift back to the upside as well. And again, this is going to look at the market volatility that VantagePoint is navigating through here. Whether you want to take a quick shorter term move or whether you're, wanting to stay in, very quick short term, you can have the confidence to do so by evaluating some of these key levels as well. You can see price action really bounces back and forth between these key levels as well. And so with that, you can see bounce off of support, break through resistance. Who was looking for that breakout? Somebody mentioned that before. If we're able to break resistance, we oftentimes see a really nice push. But guess what, guys? That resistance level said, nope, can't really go any higher than that. Bounced off and came back to retrace to the support. So right now we're at a pretty strong support level here that we've had for quite some time. In fact, we've had that support level since early June of this year, where we can see prices actually failed to break that level several times throughout the past, couple of weeks or months even, as well as we start to approach August. And I bring up gold because gold is one of those assets where if market conditions start to shift to the downside, if we start to see equities, really weakening, these are areas of the market that could potentially start to, really thrive under those uncertain times or uncertain conditions. We talked about those consumer staples as well. So opening things up for those traders who might be a little bit more fearful, starting to move some things over into different assets like that. We can even take a look at that consumer staple sector as well to identify where other assets might be moving as well. You can see here's your consumer staples also. All right, so we've got a good breakdown of the markets. You can look at that category here. Maybe you're looking at, consumer non-cyclical, right? Nothing shifting right now out of that bearish reversal. Someone had asked, well, I'm not getting any markets coming up in that scan. Okay, it might not be time for that just yet, right? Go find other areas of the market that are moving, and you may expect a shorter term trend based on some volatility that's happening, but when or if that shift occurs, where are you going to move your assets? Use Intelliscan to find those. Don't second guess yourself. Don't even guess to start with. Really give yourself the advantage of being able to scan based off of these predictive indicators to find great, opportunities where not only is the sector moving, but also the asset is moving as well. So these are just kind of, several examples of, how to really identify those different areas of the market and put yourself and position yourself on the right side of the trend. Whether or not you're looking for incredibly, long bullish runs, you can look for and scan for assets that are expected to move stronger, but also protecting yourself from this downside risk and knowing when to potentially enter back in using that predictive data and that predictive analysis. So don't forget to like and subscribe. Also hit the alert button, that little bell, so that way you get the alerts for our sessions. We do have them periodically throughout the week. So, we certainly hope you join us for another live session for our VantagePoint University and VantagePoint, family members. Of course, we have those additional resources for you also. So I always look forward to seeing familiar names in the session, but it was nice to have so many, new potential users to VantagePoint in the session today. Just hoping to share and pass along some knowledge that can help you in your trading, whether or not you are using VantagePoint or maybe using a different platform. I hope you learned a little bit about the markets today and just understanding the importance of knowing when some of those key fundamentals are happening, like Fed announcements, tariff, looming deadlines, and just sort of overall market chaos, but knowing where to move and how to maneuver through those scenarios, whether it's finding safe haven assets or identifying stronger trends to have more confidence in your trade decisions. So I certainly hope everybody has a great rest of your week, and I will see you guys on the next session. Looking forward to it, and we'll see you then.